But are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time. But I think it should be great for us. I mean, I think it should be great. It's going to be great ultimately for the farmer. You know, don't forget.
Is the U.S. going into a recession? Well, Trump's latest comments on the possibility of a recession have sent shockwaves through the economy. When asked if he's expecting a recession this year, Trump responded with his signature vagueness, saying, "I hate to predict things like that, but let's be real, his words speak louder than his actions." Like we've all heard it for ourselves in the video. Now, he went on to say that there's a period of transition because of the big changes he's making to bring wealth back to America. Sounds promising, but the stock market tells a different story. Stocks are plummeting and people are freaking out. Now, the public is reacting and boy, are they fired up. Some are calling out Trump, saying that when the recession hits, everyone will blame Biden. But they should remember that Trump inherited the best economy in US history and Biden kept us out of recession for 4 years. So with that said, let's take a look at these videos as different people react and share their own thoughts on this. I will be right back.
So Frumpy has said that a recession is likely in the next couple of months. So y'all, we need to start preparing now, stocking up your food and etc. because the last recession we had was hard for everybody. You know what? Biden kept us out of a recession for 4 years and just to put us in a recession in a matter of months. And now and then on top of it, in Canada didn't put on 25% tariffs on electricity. So everybody in the Midwest and up north, y'all electricity bill is about to go up in the middle of a recession. Your bills are about to go up. The Dow Jones, the stock market is going down again as well. How many times this man crashed since he's been in office? Get me off this goddamn planet. I'm ready to go. Aliens. Y'all say y'all was going to be here years ago. Where are y'all? We need y'all to come pick up some folks. I mean, if y'all don't want us, take him.
Rates are plunging. Let's talk about why. Look at this. Everything is in a green. All of the fixed rates are in a green except ARMs, right? Well, you're probably not getting an ARM anyway. But look at this. 30-year fixed, 15-year, FHA, VA, jumbo loans. These are the averages of those rates, y'all. Now, this for good credit score people. So if you got bad credit score, they ain't talking to you. Promises made, promises kept. That's the slogan. That's what they always say on the White House website. So I don't know if this was the promise that they meant to keep, but this is where we are. He said he was going to get the rates down, and it looks like a recession or a looming recession is going to be the catalyst for you to have lower mortgage rates. $1.7 trillion has been wiped out from the U.S. stock market after Trump declined to rule out a possibility of a recession. Now, if you remember last year when they were cutting interest rates for mortgages actually went up, and they were coming down over the summer, and toward the end of September, they started to go up and up and up and up. And that was because the markets, same market here, started to project that Trump was going to win the presidency, and it reacted in a positive way because he was supposed to be good for stocks, good for the economy. Well, fast forward, we were about 40 days in, 45 days in, and now we're looking at a recession because of the tariffs and because of layoffs and some other things. So make this work for you. Now, rates started to go down before and they didn't stay down long. So it might be time for you to jump in the market and take advantage if you can before something comes along and sways the market to go the other way and rates start going back up again.
No! Are we about to enter recession? We're not quite there yet, but there are signs, like the stock market starting to drop. Investors are moving out of the market and getting into bonds, and you're starting to see mortgage rates improve. And again, we see the 10-year bond dropping under 4.25. Looks like it's about to consolidate for the bigger drop. So keep your eyes and ears open. On March 12th, there's going to be a very important inflation report. If inflation comes in lower, and there's still talks about tariffs, you can see mortgage rates improve. But if inflation comes in hotter, or you don't see more talks on tariffs, or tariffs comes off the table, you can see mortgage rates and the 10-year push back up. Let me know in the comments below, do you think inflation is improving or getting worse? I think it's improving because I don't think people got money to spend, especially on eggs. For those of you guys who are buying or refinance today, here is the nationwide average mortgage interest rates. Remember, these rates are just a ballpark. Give your lender a call so you can get an accurate quote.
And his followers were literally like, this is what being American is paying more and struggling and making sure that you eat dirt for lunch and that you can only have $25. Like, that's not the American dream. It's being successful and thriving. And the only person that's helping are the 100 billionaires that live here in the country. He's not for the working class, you guys still learned. But you're going to find out for sure, because you guys are not going to get any government assistance. And when you struggle to not have any money to pay to feed your kids, don't come blaming Democrats or liberals or Biden or Obama, because that's what you're probably going to wind up doing. You're going to have to learn to experience how, because the kids are the ones who are going to go through the worst of it. But as moronic adults who have kids who voted for this piece of shit, what do you want us to do about it? Because you guys literally voted for this. To be poor. The struggle is going to be so for the majority of you guys.
Trump said last night that we might have a recession. And when it hits in 3 months and everyone blames Biden, just remember Trump was handed the best economy in U.S. history. And Biden kept us out of a recession for 4 years, and it only took 4 months for Trump to put us in one.
So I got a question. This is for people that have 401ks, people that have high yield savings accounts, people that have money in the bank. And with the current situation going on with this president and the tariffs and the threat of the market crashing, recession, all that, what do you do if you have a 401k that's attached to stocks? Like, in your opinion, again, this is for people that know what to do with financial situations. Like, I hope this gets to the right people. What do you do if your 401k that's attached to stocks and you check your 401k today and it's already lost $8,000? And like I said, there's a threat of a recession from this current president, the tariff wars, it's a lot going on. What do you suggest you do with your 401k? I know that if you take out your 401k, you'll get a 20% penalty and then you'll owe the IRS some money too. So what do you suggest you do in a situation like this where you have money in a 401k and it lost $8,000 in one day today? What do you suggest you do with your money? Do we get a IRA? I think it's an IRA CD or mutual funds or trusted funds. What do you suggest you do? Because I don't know what's going on in 2025, but we have kids, we have family, and we don't need our money to not work for us with all the current stuff that's going on. So what do you suggest you do? Just this is for anybody that knows the question.
It is March 10th, 2025, and finally, Trump admits that a recession is possible. Today, he said that he wouldn't rule out a recession, and at that, the stocks started selling off even more so than they have been. As of about 1:30 p.m. Eastern time, the Dow had dropped 700 points, the NASDAQ dropped over 700 points, and the S&P 500 has dropped about 150 points. Tech stocks have led the sell-off, which includes Google, Apple, Amazon, Meta, Microsoft, Nvidia, and Tesla. And the VIX index, which measures the volatility in the market, but also measures the fear in the market, skyrocketed. It went up 15% just today. It's been going up steadily over the past week and a half, but it really went up a lot today. Trump continues to push trade wars, of course, with China, Mexico, and Canada, which he knows could very well throw us into a recession. That mixed with, these mass terminations that are going on is not going to be good for the economy. All of these things are really major moves in the economy and definitely will throw us into a recession at this rate. Prices will continue to go up. As inflation continues to go up, people's investments are tanking. Consumer spending is already down. Debt has gone up. Unemployment and underemployment will continue to go up. And it might be time for Trump to finally listen to experts for a change, leave his ego at the door, and consider the people of the United States, because, this won't impact billionaires the same way it will impact the people who are living paycheck to paycheck and are already feeling a lot of pain.
Now, President Donald Trump says his administration is making very big moves and has acknowledged there is likely a period of transition or disturbance that could result. Now, fears of a severe economic downturn have escalated in recent weeks, and stocks plunged Monday on Trump's comments, continuing a steep sell-off driven by concerns about the impact of tariffs on U.S. economic growth. But are recession fears justified? Here's what history and the current economic picture can tell us about the potential for a recession. The traditional and official definition of a U.S. recession is a significant decline in economic activity that is spread across the economy and that lasts more than a few months. That's according to the National Bureau of Economic Research. A private nonprofit organization has a very important role when it comes to these downturns. Its business cycle dating committee is the official designator of peaks, troughs, expansions, contractions, and yes, recessions in the business cycle. The committee, in making its recession determination, uses 3 criteria: depth, diffusion, and duration. Now, while each of these needs to be met individually to some degree, extreme conditions in one of those areas can offset weaker conditions in the others. Also, it's often the case that the U.S. already is in a recession by the time the business cycle dating committee officially deems it so. Prognosticators have turned to other gigs as potential recessionary indicators. However, they don't always prove true. The biggest rule of thumb or non-official recession indicator is the technical notion of back-to-back quarterly contractions in real gross domestic product, the broadest measure of economic activity. Now, we have to be careful with that definition. Gregory Deco, chief economist at EY Parthenon, told CNN Monday, a contraction in GDP can come from multiple sources, including, as may be the case in the first quarter of this year, from an environment where you have a surge in imports. Now, the running forecast of GDP from the Federal Reserve Bank of Atlanta estimates that first quarter GDP may decline by an annualized adjusted rate of 2.4%, the first quarterly contraction in the U.S. since 2022. Import activity has accelerated and the trade deficit has grown in recent months as businesses and consumers ramped up purchases in advance of potential tariffs levied by the Trump administration. Plus, the back-to-back GDP indicator isn't always accurate. Now, the U.S. experienced this in the first half of 2022. Although the second quarter was eventually revised into a slight expansion, while those declines set off alarm bells, 2022 was a year of transition as the economy sought to recover from the sharp and sudden downturn caused by the global pandemic. Imbalances in trade and inventories had an outsized effect on the GDP data in the earlier part of that year. If the rule of thumb can't always be trusted and the official ruling comes late to the party, what are recession events? Now, the NBER committee has its 3 Ds and DACO has his triple P rule, a profound, pervasive, and persistent contraction. It can't just be a blip in economic activity, he said. It has to be pervasive in that it can't just be one sector or one weak region of the economy. It has to be across sectors and across regions of the country, and it has to last. He added there has to be some persistence, so it can't just be a 1-month mishap with consumer spending or employment or whatever economic data we get. It has to last some time. The exception to the rule was the recession triggered during the COVID-19 pandemic, in that it was extremely profound, extremely pervasive, but very short-lived, he said. Now, economic warning signals have increasingly been tripped in recent weeks as the Trump administration's sweeping policy changes across major areas of the economy have heightened uncertainty. Layoffs are ticking higher and inflation re-accelerated last month, with consumer prices rising at their fastest pace since August 2023. Now, data also showed consumer confidence took a significant hit in February. We are not seeing any indication that there is an imminent recession, but we're seeing signs that private sector activity is cooling, DACO said. We're seeing slower labor market momentum. We're seeing consumers spending with more caution. We're seeing businesses adopting a bit of a wait-and-see approach. And we have a lot of uncertainty and a lot of downside risks from the policies, in particular, the trade policies that are being implemented. To that end, there are plenty of reasons to be cautious right now, DACO said. There isn't necessarily a reason to be extremely concerned about an imminent recession because we are coming out of 2 very strong years of growth. He said, an environment where income growth was strong, where productivity growth was strong, where consumer spending growth is strong and really where the economy overall was quite strong. However, as 2025 rolls on and if the headwinds from restrictive trade and immigration policy, as well as overall uncertainty, continue to persist, that could lead to a more pronounced slowdown in economic activity that could trigger stress in financial markets. One of the biggest areas to watch in the coming months will be the financial health of Americans. Consumer spending is the main pillar of the US economy, so if it were to start cracking, then that would remove one of the main foundations of the US economy and could precipitate a recession, Darko said. Now, the trajectory right now of consumer spending is not in and itself concerning. On average, we're still seeing strong consumer spending momentum, but higher income individuals are doing more than their fair share of spending. And if that group pairs back or has its confidence shaken, that would be a concern. For now, Trump's tariff policies seem to be sowing confusion for businesses, consumers, and investors. Over the past few weeks, the Trump administration has imposed steep tariffs on America's three largest trading partners, Canada, China, and Mexico. Stoking fears of increased prices, Trump has said the tariffs on Canada and Mexico are a result of the country's policies around undocumented immigration and de-trafficking. And last week, he said he was delaying the bulk of his most severe tariff threats. They are now set to go into effect on April 2nd. Now, the risk that the US economy will enter recession this year is rising. And according to economists, as Donald Trump's chaotic approach to tariffs continued to hit markets, shares on Wall Street fell sharply on Monday as investors bet the president's unpredictable tariff trade war and handling of the economy would hit growth amid a recent plunge in businesses and consumer confidence. On another day of selling pressure in global markets, the Dow Jones Industrial Average was down 1.5%, while the S&P 500 was down 2.4%. Share prices also fell in Europe as the FTSE 100 tumbled 0.9% in London. Germany's DAX was down 1.7% and France's CAC fell 0.9% on Monday. Now, economists say the risks of a Trump session had increased as the president's brinksmanship and stop-start approach to tariffs rattled global investors, exemplified by last week's decision to pause U.S. tariffs on goods from Canada and Mexico for the second time in as many months. Now, with everything going on, do you think the U.S. is actually heading into a recession? Share your thoughts, your views, your contributions on what you think about this topic in the comment section down below. Thank you for always watching and see you in our next video as we bring you another video.